Hello, Internet friend. Today on Value Side, it's this week's economy, $1 trillion speculation, a new Fed chairman, and a geopolitical MOU. Altogether, a most historic week. I'm David Ravel. Well, at the turn of the 20th century, one of the greatest fortunes in history was created. A young man named Henry Ford founded an automobile company that would become the most significant industrial marvel of its era. The production of the Model T and later the Model A provided Ford with arguably one of the largest fortunes ever. That is until this week, when another American, Elon Musk, accumulated an estimate $1 trillion in personal wealth. The occasion was when his company, SpaceX, went public. And to most casual observers, this may sound like history repeating, just one more American gazillionaire following another. But that would be misreading history. For while one was a capitalist, the other is more accurately described as a financialist. It's a difference that describes how our country has gone from an industrial colossus that produced virtually everything our citizens needed to a situation where we must rely on others to produce our essential day-to-day goods and products. Now, the story of Henry Ford is legendary, and the way most Americans visualize how our economy operates. In the early days of the 20th century, Henry, then a buggy maker, made an opportunity to transition to make new horseless carriages. On the production of a few of his new automobiles, he realized that with some extra funding, he could expand his operation. So Henry invited some private investors to join his growing motor company, a kind of friends and family that burgeoning entrepreneurs often use to launch a new enterprise. What's important to realize is that the funding did not make Ford wealthy. It was only the first step along the path. Ford would not become financially independent until his product, the Model T, became the number one selling American automobile. Success for Ford came from the factory, not from Wall Street. In Elon Musk, we see the polar opposite, and an incredibly successful business owner who has yet to produce any profits at all. While Ford gained its wealth through the profits of each car sold, SpaceX has yet to sell anything, at least on the space side. There are 123 years between Ford's startup and Musk's, and the distinction in how we finance entrepreneurs could not be more stark. For Ford to obtain capital, he first had to demonstrate that he had a viable operation, one that provided an appropriate return. That return, or corporate income or corporate profit, ultimately provided returns for Ford's lenders and for his investors. But how can you deliver a return or a dividend when your company has no revenue at all? On what basis are investors purchasing SpaceX stock? Answer: they're speculating that the price of SpaceX shares will rise. It's the greater fool theory in practice. It's a mentality that has captured our financial systems. Today, if the truth be told, Mr. Musk's SpaceX venture will succeed. But in 1903, those first Ford investors already knew that Ford could build a car at a profit. One system created the world's greatest industrial power. The other throws a lot of money at an untried idea, and that's pure speculation. Now, the MOU. Can we agree on something? I can only imagine how difficult and complicated the negotiations leading up to the Iran MOU agreement must have been. In a past life, I was involved in active negotiations between various financial institutions, light years below the level of complexity that must exist between Iran and the United States. But even from my position, I could see the complexity from a legal considerations to how an agreement would function and finally how it might be implemented. In the case of the recently agreed memorandum, there were considerations of reopening the Strait of Hormuz, the financial arrangements that needed to be agreed upon, and how to ensure the hostilities would cease, especially with Lebanon. And finally, who would represent the two countries. Each issue was a stumbling block and an obstacle on the way to an ultimate agreement. When you realize the scope of the negotiations, it must have become apparent that a treaty would be out of the question. On the U.S. side, treaties require Senate endorsements, which would take weeks or perhaps longer. But what was needed was an immediate halt in fighting. That's when someone, likely the president's team, suggested using an MOU, a Memo of Understanding, something that's a normal procedure in situations that need quick resolutions but where significant issues still remain. It's something that President Trump, no doubt, has used in his many real estate transactions. In essence, an MOU is used when negotiations hit a snag or needs to move ahead somehow. It's a way of answering the question, isn't there something we can agree on? Then you go through the process of delimiting those things both sides agree to. You realize that you're much closer to the ultimate goal than you might have thought earlier. At their core, MOUs are just lists of agreements. The Iran MOU says we agree to stop fighting, we agree to certain monetary settlements, and it lists other agreements. However, it's likely that all the issues have not yet been resolved. The MOU provides for a 60-day ceasefire to reach an agreement on all of those remaining issues. For 47 years, the United States has engaged in unconventional methods in opposing Iran, using economic sanctions, military pressure, diplomatic isolation, all against the Islamic Republic. During that extended period, two agreements have been reached. The first, the 2015 JCPOA, a joint comprehensive plan, and now this Memorandum of Understanding. Two unconventional agreements that fall far short of the legal status of a treaty. The first agreement lasted only 2 years and was abrogated by you, Mr. President, in 2017. The world now asks whether you're committed to this new unconventional agreement with Iran once again. Kevin Warsh, the new chairman of the Federal Reserve Board. Kevin Warsh, the new appointed chairman of the Federal Reserve, presided over his first meeting of the Fed Open Market Committee, the committee that sets short-term interest rates this week. An attorney by training, he is the second lawyer to lead the Fed. Jerome Powell, his predecessor, was the first. This legal background is not inconsequential. We saw in Chairman Powell a desire to avoid conflict and manage the Fed's policy amicably. Thus, Powell's Fed was much less doctrinaire than, say, Paul Volcker's or Ben Bernanke's, both of whom were economists. It's likely why Warsh avoided taking a strong stand on interest rates in his first meeting at the chair. And so ended a historic week in the markets, in the economic news. The markets eclipsed once again several record levels. A conflict with Iran seemed to inch closer to a resolution, though a very unconventional Memorandum of Understanding was used. The Federal Reserve began the Warsh Era, and SpaceX completed a $1.77 trillion public offering, the largest IPO in history. And that's This Week in the Economy. For all of our articles and podcasts, visit valueside.com. I'm David Ravel. ValueSide is independently written and researched. The views expressed are strictly my own.